Hi guys, JoAnne Hamberg with the Real Estate Exchange, and today I am very fortunate to have my wonderful niece, Victoria Jaffrey, who works with me at the Real Estate Exchange, join us, and Lacey Faria with CrossCountry Mortgage. So today we want to talk a little bit about the market and how things are, what we're expecting with the spring market. So Lacey, why don't you tell us a little bit about yourself and CrossCountry Mortgage?
Sure. I'm Lacey Faria with CrossCountry Mortgage. I've been here at CrossCountry for about 3.5 years now, but I've been in the mortgage industry for about 7. I've also, before mortgages, I was a real estate paralegal for about 10 years, and I've also done real estate sales for like 7 years. I'm a landlord, so I know this transaction from beginning to end like the back of my hand. And CrossCountry is great. We're the number one retail lender in the country, so we write quite a bit of loans.
That's awesome. And Victoria, tell us a little bit about you and your journey in real estate.
Absolutely. So, as JoAnne mentioned, I am her niece. I have up in the real estate industry for many years. I remember being a little toddler and doing coloring contests for the office and seeing all the MLS books and helping carry signs up and down the stairs for all the agents. So, I've been around the industry for a very long time. I myself manage some rental properties. So, definitely been in this for around 6 years now and live, breathe, sleep, eat. My family, it's in my blood. I'm here for it.
Yeah, you don't have much choice when you're around us. That's the thing. But this is the beautiful thing is we all own real estate. We all know been through it. We know the ups and downs so that we can help people, which is really the most important thing, being able to help our clients, you know. So Lacey, how are you finding the interest rates? I know a lot of times people are like, oh my God, the interest rates are going up, the sky's falling. I mean, what are you seeing with the interest rates?
Yeah, I mean, over the last couple of years, they've obviously been on the higher side for sure. So it did scare people for quite a bit. We're starting to see them come down, and I feel like people are getting used to the higher rates. So rates right now are in the sixes on the average, mid to high sixes. And I don't really feel like people are pushing back much about the interest rate. I feel like they're still pretty motivated, and this is starting to become the new norm for them.
Absolutely. You hear it on the news, and really, it's like Chicken Little. The sky's falling. Nobody's going to buy a house. And I bought my first house many, many moons ago, and I had to get an adjustable rate. I got an 11 and three quarter 3-year arm because the average rate at that time was like 16 to 18%. And it was the only way I could qualify. So I went with an adjustable rate. And, you know, you either refinance or do whatever afterwards. I mean, what are you seeing, Victoria, with your clients, with the change in the interest rates? Obviously, they don't qualify quite as high, but what are you seeing on your end?
I'm seeing a lot of buyers having that expectation of what they're paying for now and planning to refinance. They're planning on falling in love with the house. And we say it a lot in real estate is you marry the house and you date the rate. Like at the end of the day, you can't let anything stop you from moving forward on the house because everything's going to continue to increase in price. Everything's going to continue to change. And if you think back on what houses cost 5 years ago to what they cost now, and what houses cost 30 years ago to what they cost now, the trend is continuing on the same upward slope. We're not seeing anything go in reverse. So if you're waiting for it to become more affordable, that time is now.
Yeah. Well, you're never going to get the interest rates we got before, and you're never going to get the house prices that your grandparents paid for their house. I mean, it's just not happening. So you have to either jump in and do it or continue to rent. But when you look at the rents today, 2,500's average, I would say, or more. And I just had a client today. I just ran some quick numbers for her. They're paying like 1,600 a month, and they can qualify for like 325,000 in a, um, they have a decent down payment, but they could qualify for easily $200,000. So, you know, I'm sure you could give us better numbers, Lacey, like someone who's looking at a $3,000 a month mortgage. they must be able to qualify for close to 400,000, I would think.
Absolutely. We look at debt to income ratio, and I also focus a lot on that payment with the client. So we try to avoid the interest rate talk because it is what it is. What I really do is I make sure that these clients are comfortable paying that monthly mortgage payment. We talk about their personal budget as well. So I could qualify somebody for $1 million, doesn't mean they're going to like that monthly payment. So we are really right. We are really in tune on their own personal budget, making sure they qualify and they're happy with that payment.
Yeah, I think the payment's the most important thing because that's what they've got to look at. You know, it's a
Absolutely.
matter of what you're comfortable and you don't want to get over your head. What programs are you finding, Lacey, have been your most popular with the
Yeah, so
financing?
here at CrossCountry, we have every program under the sun, but our most popular are the straightforward loans. So the cookie cutter loans, which are conventional loans. The minimum down payment on those are 3% down. We have FHA loans with the minimum down of 3.5%, and we have VA financing, which is 100% financing. So those are the three most popular. I would say conventional and FHA are used the most. So when I pre-approve a client, we kind of go over the different programs. Okay, what makes most sense? When it comes down to it, we really want to focus on that monthly payment. What's going to give you the cheapest monthly payment and also make your offer look very strong in this competitive market?
Yeah. I mean, Victoria, you know, with writing a lot of offers, what kind of things have you been working with your clients on so that they're making stronger offers? What kind of items are you seeing that are helping buyers with being able to obtain that offer?
Absolutely. So for me, my biggest thing that I talk about clients is number one, what Lacey was talking about is number one, they need to be comfortable. They need to be comfortable with their mortgage payment. They need to be comfortable and informed in what they're doing. Biggest thing for sellers and buyers is the lack of contingencies. So obviously, if you have cash, it's one less contingency. But most people, let's face it, most people don't have $400,000 in cash laying around. If they
Or
do,
more.
call me.
Yeah.
I would love to work with you. But it's one of those things you don't have that kind of funds. So having stronger pre-approvals, having correct pre-approvals from lenders such as Lacey versus these online generators who don't check all your stuff. They don't talk to you. They're not available on the weekend. Having a good reputable lender is so valuable in this competitive market. Having well-known lenders where the listing agent, everyone knows that the deal is going to go through. There's so many other factors to keep in mind as far as larger deposits for escrow, putting in different contingencies such as gap coverage, not even just for the appraisal shortfall, but more as an insurance policy. Because even something small with that versus no one else doing that is going to make your offer stand out in different tactics and just having those conversations and understanding where you need to be and what's going on. And that's what we're here for.
Yeah. Well, one thing that you mentioned is, you know, going to a local lender that you know is going to have that communication. It's just like having an agent. This is a team, and we are all working together to, you know, help you find the right home, be able to purchase it, and provide you with that sense of security once you own it. So having a good team behind you is really important. And I think that's the key is having a good agent represent you and a mortgage officer looking out and going over numbers and making sure you're ready to go. And sometimes people, they're just not quite ready. They think they are, but when they meet with you, Lacey, I mean, I'm sure you're going to come up with suggestions or things they can do to improve their credit.
For sure.
And I'm sure, what kind of things have you seen that you've helped people with, like I know in instances, you know, you have someone who's qualifying and they have a car loan and the car loan still got, you know, 16 months on it. And I've heard that paying it down so it's under 12 months, you don't have to count it so they can qualify better. I mean, are there other things or is that something you've had to use in the past?
Absolutely. So paying it down under 10 payments, well, we can omit that installment loan as long as it's an installment loan, not like a revolving credit card. One of the major things is credit score. What can I do to get your score up above the next threshold? Okay, so the top tier is 760 or above. Maybe my client's at 755. Okay, I'm sure we can get their score up by 5 points to give them the best interest rate or best mortgage insurance quotes. But I actually had a client call me today. He has a lot of student debt that he's been chipping away, and he's putting a lot of money towards that and not saving towards the down payment. I said, hold on, okay, you're paying extra towards that payment. Why don't you fill up my application? We will look at the overall picture, and I will let you know if you should be putting that money towards your debt to try to get your debt to income ratio down, or if you should start saving it towards the down payment. What would make more sense? But you never know until you have that financial picture, which is the application. And then what I do is I hop on a Zoom, just like we're doing right now, and we have that mortgage consult, and we go over everything. By the end of that call, my clients are very comfy. They're ecstatic. They're motivated, and if now is not the time, then we will train you to do what it takes to get you that house. I have clients from a couple of years ago that are getting back in the market, but their file looks a lot better now. So there's all kinds of things you can do to tweak an application to make it look better.
Yeah, and just because you're applying for a mortgage doesn't mean you have to go and buy a house today. Maybe it's
Exactly.
just a matter of sitting down with a loan officer and spending a few minutes to understand your credit report and understand where you need to be. So it's kind of like a roadmap on what we need to do and how we can get there. And maybe now's the time, or, there's lots of different things. I mean, even like down payment, everybody's going to be getting tax returns here shortly. Those tax returns can be used towards a down payment and closing cost, and it's just a great time to use it. And I think that's part of the reason the spring market's so good,
Exactly.
But I think it's a team effort, and that's really important. How are you noticing the inventory, Victoria, like locally? Have you seen how we doing inventory wise?
We're doing pretty good. I mean, right now, I did some numbers from yesterday to today, with just the town of Lunenburg. So yesterday there was 11 single family homes for sale. Today there's only nine. Uh, two homes went
You're
off the
under
market
agreement?
as of yesterday. So just a quick little look-see. So just for the town of Lunenburg, there have been no homes actively for sale under 400,000. Yesterday, there was three homes for sale between 401 and 550,000. There's only one today. You have two homes that are in the market of 551 to 750. Five homes for sale in Lunenburg from 751 to 950, and then one home that's above $951,000.
Yeah.
Lunenburg, there's 18 homes that are currently under contract, three of which are under 400K, six which are above the 400 to 450. There are six homes between 551 and 750, and three homes above 751.
I
So,
think we'll see more inventory, which will be good. Like you're saying, I mean, homes are selling. They went down with two homes go into agreement just in one day. So that shows that the market's pretty aggressive. And homes are still selling very quickly, and it's a great time to sell. So I do think we'll see a lot more inventory. We always do this time of the year. People start to think about moving. Lacey, what do you think about a fixed rate versus an adjustable? Like I said, my first mortgage was an adjustable. I mean, what are your thoughts on that? Are you seeing more of those?
I think people will inquire about them. I feel like fixed is the most popular just because they know that's what their rate is going to be. Okay. That it's not going to change. It's not going to adjust in the future. They're comfy with that. Sometimes the adjustable rate mortgage, the rate is a little bit lower. I feel like right now it's not as aggressive as it usually would because the market is so volatile. But for adjustable rate mortgages, I feel like a lot of the larger loan sizes are going that route just because even a quarter in a difference in a rate, a quarter point, will make a big difference to their mortgage payment because their loan is so large.
Yeah. What about points? Do you ever advise someone to buy points, and what do
This is
you
a great question right now.
explain about points?
Yeah, so every interest rate comes with a cost. The cost is discount points. It's a percentage of the loan. So when we quote rates on a pre-approval, or if somebody gets an accepted offer, I try to get it as close to zero as possible. Let's say the rate's 6.75, costing no discount points. Sometimes it makes sense to buy the rate down a little bit to make their payment a little more comfortable. So I can't give an exact number because, again, I need a scenario and a loan size. A lot of times people will pay like a quarter of a point, sometimes half of a point. The thing is, now, when we know that there are going to be refinances happening in the near future, hopefully, and those rates are going to come down, these clients may refi quicker than it would take to recoup the cost of that rate. So let's say they paid $3,000 to buy their rate down and they refinance in 6 months. It's kind of wasted money at that point. So we really talk about, okay, are you comfortable for the time being? Do you need to buy it down at all? Or the opposite way? Do I need to raise your interest rate a little bit, give you a lender credit to offset some of the closing costs? Okay, because we can give a lender credit that way too. For the most part, I'm advising clients to not buy it down a ton, maybe just a little bit, because they are going to be refinancing and we want to make sure that money is in their pocket for the refi.
Oh, that's great. Yeah.
Mm-hmm.
When someone's getting a point, what does that cost them?
Okay, so one discount point is 1% of the loan amount. So if it's a $300,000 loan, there's $3,000 right there. Okay, so it could get very expensive. Some people are like, okay, what's it going to take to drop my rate 2 points, like 2 full percentage points in the rate? I recently had one at like a $500,000 loan. It's going to cost them like 20 grand. Okay, so every day is different. We have to look at our rate sheet. So people come in like, oh, I want to buy discount points. I'm like, do you really know what that means? And it's going to be worth it. Most people don't even know what it means.
Yeah, that's why I figured we'd talk about it. How are you finding, Victoria, the new buyer agency requirements now that the board of realtors is now enforcing that we don't negotiate right up front the compensation as part of our compensation? Are you having any problems with people like sitting down and understanding who represents who and how the buyer agency agreement is handled?
No, I'm seeing a lot of amazing things with that. I think it shows buyers more the value of having a buyer's agent and really having a clear understanding of who's who and what's what in a real estate transaction. In Massachusetts, we do have the mandatory disclosure, which shows you who's the seller's agent, what's the buyer's agent, what's a facilitator. And unfortunately, prior to uh, this new, what's the word you're going to call it?
Separation of compensation.
Well, this new rule, I'll use the
Yeah.
word rule, this new rule. Well, prior to this, I'd meet with buyers and show them the mandatory disclosure, which was the only thing that was required before. And they would be like, what is this? I've never seen this before. And they just didn't understand that there is a big degree of separation, that not everyone is looking out for your best interests, and that the whole point of having someone on your side is to protect you, to protect your interests, to have that confidentiality, to not throw you under the bus. Oh, yeah, I'll pay up to $400,000 for that house. But you have a real estate agent on your side that knows the market, that knows what's going on, that's done their research on the property. So you work with them and they're able to get you the house for 350. Well, you were willing to pay 400. That real estate agent had just saved you $50,000 that you didn't have to put out there to get the home.
Yeah.
And
yeah, well,
sorry,
but I say in some
yeah.
cases, it just might be enough to help you to know what to offer, like we talked about, doing a little bit of gap, which.
Oh yeah, just having those strategies, having the toolbox, and just having the knowledge to be able to help. I think the buyer agency agreements are very helpful because it decouples everything from being together from, oh, why am I giving money to this person when they don't do anything for me, as far as the seller's aspect. And then the buyer's aspect, well, why should I pay someone to help me when I can go and do it myself? Well, I can go change the oil in my car myself. That doesn't mean it's going to go very well. Or if the oil is going to go and drain out all of my car as I drive down the driveway. Just because I can theoretically do something doesn't mean it's going to work out well for me in the long run.
Yeah, well, everybody has their own specialty. I'm not a computer techie. I have a hard time getting set up on Zoom, but I know real estate. and I've been doing it 40 years, so it's what I know. It's like going to a doctor. You want a professional that represents you, and this is what we do. And if anyone in the listening has any questions, they're welcome to put any questions in the chat. We'd be happy to answer them. I should have said that in the beginning. But anyways, Lacey, when you're going through the mortgage pre-approval process, how difficult is that? Is there a lot involved? And
Not really. It's very simple. So a lot of people get intimidated because they think it's going to be a lot of work. It's going to take them a lot of time, and they think that they're going to hurt their credit. So when I get introduced to a client, maybe it's Victoria sending me a client, I hop on a quick 5-minute phone call just to introduce myself and tell them about the application process. From there, I send them over my online application. I like them to fill it out because I like the information to be correct, like their social, their date of birth, etc. It takes literally 15 minutes, okay, just to do the application. Very easy. You can even do it from your cell phone. At the end of my application, it'll prompt you to upload the generic income docs. So if you're a W-2 employee, 2 years W-2s, 2 most recent pay stubs, most recent bank statements. From there, I do a soft pull on their credit. So I don't even have to hurt their credit right now, which is great, okay? Because that's everybody's biggest fear. At that point, I have their financial picture. Once I have that, I set up a Zoom call just like this, and we have our mortgage consult. I literally can do it within 24 hours. So I had a client today fill out the application. They uploaded everything on time. We already have a scheduled call tomorrow to review everything, kick them off their pre-approval letter. They're ready before the weekend. Simple.
how long does it normally take you to put together a pre-approval? I mean,
As long as, if it's a straightforward file, W-2 income, everything's in there. I can probably whip that up in 20 minutes sometimes. Okay. I've done so many loans, so it's very easy for me. I know what to look for. I do verify income documentation though. I'm not the type of loan officer that you're going to say you make $10,000 per month and I'm just going to be like, great, that's awesome. Here's your pre-approval. I will make sure of it because the last thing we want is a client to fall in love with a house and have their file fall apart mid-transaction. But I can whip them up very quickly for the most part.
oh, that's awesome. Victoria, what are you seeing like, if you have a home buyer now or someone who's thinking about selling, what would you recommend to them? Like, is now the time to do it? Should they, worry about the interest rates or what's going on in the government? What are your thoughts on that?
Well, my thoughts on it is that you don't want to wait. I can't stress enough that you don't want to wait. The government, everything, not to get political, but there's always something going on in the world. If we all waited for rainbows and sunshine and everything to stop, well, I think the whole world would stop.
Yeah. Yeah. No, I think you just got to get out and do it. Wouldn't you agree, Lacey? Sit down, get your numbers, find someone you're comfortable with, and create a team so that you can work together. And all of us use we like to use local attorneys, local mortgage companies, local home inspectors, because we know this market. Wouldn't you agree that now's a good time if you're thinking of buying or selling and the numbers work for you?
If the numbers work for you and if you're ready, go for it. Because what's going to happen is as these interest rates keep coming down, more people are going to qualify. They'll be back in the market. During COVID, everybody qualified because interest rates were super low. Okay, their debt to income ratio is low. And the more buyers that are in the market, the more competition there will be. And we would rather you buy now with the rate higher, refinance later, versus having to overpay for a house, compete just to win that offer. But if you are ready and if you feel comfortable, you're excited about that, do it now. Get out of renting. I can tell you personal stories about me building equity over the years and all the homes that I've bought. And I look back and I'm like, I am so glad I took that risk back then. Okay, it made me a lot of money over the years. And even if your goal is not to do investments, make money that way, how nice is it that you're going to have something to pass on to your kids one day with a lot of equity there?
Yeah, having that legacy. And as we get older, at a certain point you want to retire, and maybe it's having a second property, you can sell it and use that money as part of your retirement, which is, kind of a nice thing. You know, one thing we didn't talk about is a lot of times loan officers will say, you know, you better lock the rate.
Mhm.
Explain what that means and how that works.
Yep. Okay. So locking in an interest rate is meaning, okay, you get an offer accepted. We're submitting your file through underwriting. We're getting the process going. Normally, I do like to lock my interest rates right away, especially in a volatile market, because the rates are going up and down every single day. Okay. But ultimately, it's the buyer's choice. If you want to lock it in right away, and that's going to be your rate by the time you close, great. If you want to risk the market a little bit, float your rate to see what it does over the next few weeks. Okay, we can do that too, and we can lock just before closing. But like I said, you take the risk of that interest rate going up. It could go down the next day, who knows? Um, but lately, I've just been telling the client, are you comfortable with this monthly payment? They say yes. We lock it in because the last thing we want to do is that rate to skyrocket the next day, which has happened over the last couple years.
What happens if they lock the rate and the rate drops?
Okay, so here at CrossCountry, if the rate drops by half of a point or more, we can do a float down. Okay, it has to drop by that much though. It has to drop by half of a point. We are allowed to drop your rate to that market rate. It does cost a small fee at that point. Do we see that happening a lot? No, because they've been kind of steady and slowly dropping. But for instance, during COVID, when all of a sudden the pandemic hit and they tanked, within one day, okay? That would be an opportunity to float your rate down.
Yeah. No, that's great information. I really appreciate the two of you taking the time. We're kind of running out of time here, but Victoria, did you have anything you wanted to add about the market or what you're seeing?
Yeah, I mean, for here in Massachusetts, our markets are usually kind of seasonal, and for a lot, depending on what you're looking for, if you're a first-time home buyer, it can also be based on the school year. September, October, a lot of buyers stop looking, and a lot of sellers stop selling. So at that point, we start to head towards the winter market. You have November for Thanksgiving, and then you have the holidays, and it just kind of depends on what you're looking for. But there's going to be more inventory right here and right now. If you want to have options and have more choices and have more leverage for yourself, now's the time to do it. If you're not that picky, then definitely wait till the winter market. It's usually a little bit more helpful for buyers. And at the end of the day, going back to what Lacey said, you want to have the equity yourself. So don't feel like you necessarily have to jump into the forever home. Condos are an amazing opportunity. Live in a condo for 2 years, sell it, put yourself in a bigger home, a better home, something with a yard. Don't feel like you necessarily have to go from renting to that single family home. It might be in your best interest to do a condo or do a two family, live in one
Yeah.
side, rent out the other, then eventually sell it and buy that nice forever home or your next home that you want to raise a family in. You got to figure out what works best for you. But at the end of the day, having that equity and that growth over time is going to be more beneficial for you than paying a landlord. It just really is. And
Absolutely.
it's going to
Unless
take
I'm the
care of you.
landlord, then it's okay. No, I'm just kidding. No, absolutely. But homes do sell year round. We find that we're pretty steady in the winter. A lot of people that are looking in the winter are serious buyers. So if you are selling your home in the winter, you're not going to have quite so many looky-loos coming through. But the people that are selling their homes are serious. They're not just, oh, maybe we'll see what the market will bring. And the people that are buying are either job relocations or something like that. They're seriously looking. So you might not have as much activity, but your property will still sell during all times of the year as long as it's priced appropriately. Lindsay, I really appreciate, I met Lacey, I really appreciate you coming in and sitting with us. How would somebody reach out to you at CrossCountry Mortgage if they wanted to get pre-approved or just kind of see where they're at and what their options are?
Absolutely. You can pop my name into Google. I pop right up. You can add me on social media. Also, if you go to loansbylacey.com, all of my contact information is right there. So you can call my cell phone or send me an email.
Oh, that's awesome. And how about you, Victoria? How can some potential home buyers or sellers reach out to you to connect and have your
Yep,
services?
you can check out my Google business at Homes via Victoria. You can go on the Real Estate Exchange website, or you can give me a call on my cell, which is 978-230-5223.
Awesome. Well, thank you both for your time. I really appreciate it. I appreciate everyone who was on today. And I wish you all the best. And for all your real estate needs, give us a call at the Real Estate Exchange, 978-582-4339. Have a great day. Thank you, ladies. Bye now.
Thank you.